Hey, good afternoon, everybody. This is Mike with Insider Secrets. Another episode brought to you by My Core Intentions. And let me ask, have you been thinking about your intentions? Have you been thinking about your why in your life and what really matters? What's important most? When we start to really dig in and formulate that why and get crystal clear on our vision and our goals, that's when things will really start to transpire in our lives. At My Core Intentions, we invest in our clients' future through an educational platform, teaching you how to create short-term cash flow and long-term wealth, and empowering you to execute sound real estate investing and property management principles. One of the things I've been talking a lot about lately with people is the fact that, we get so busy in this business that where's the quality of life go? And where's the balance? When family's important, when other things in our life become important, we have to be able to balance. So what we want to do at My Core Intentions is help you do that. So give us a call and let's see what we can do about designing some plans for you and some accountability for you. So let's get going here today anyhow. So I'm excited, have a couple things coming up. In a couple of weeks from now, we have the 3-day virtual event, the Multifamily Global Summit that's going to be coming up. Actually, our guest today will be a panelist on that summit. And I'm excited about our guest today. His name's Chad Defoor. He's a commercial real estate broker. And I really think this is probably the first commercial broker that we've had on the show. And I'm glad about that because he's going to come with a different perspective and a different insight. Chad resides in Atlanta, Georgia. He's got over 18 years of experience in the commercial space, specializes in asset management, brokerage, acquisitions, and dispositions of multifamily real estate. So during this time, Chad's worked on transactions totaling over $2.5 billion. I thought I did a lot, right? As a broker and an asset manager, Chad's currently employed by Franklin Street and is a member of the brokerage team specializing in the sale of multifamily real estate. Prior to joining Franklin Street, Chad was a managing director for the Atlanta office of Newark Knight Frank and was part of a team that sold over $1.9 billion in multifamily assets, 31,000 units. We want to talk to Chad today and find out a little bit about the time frame that took. But Chad received his undergraduate from the University of Georgia, where he double majored in real estate and marketing. While at Georgia, Chad was a member of the UGA track team, where he ran both the 400 dash and the 440 relay. Chad's an active member of the Atlanta Chamber of CCIM and the Georgia chapter of IREM, where he's obtained his CCIM and CPM designations. And you know what? We're going to get him to explain all those designations today. But here's what's really cool. Chad's married to his lovely wife, Laura, and they have 2 daughters, Brooke and Haley. And why don't we get Chad to say hello and introduce himself. Chad, I'm impressed with your background, but why don't you step up and say hi to our listeners today and tell us in one word your professional strategy that best describes you and your investment strategy.
Well, Mike, thank you so much for the invitation to be a part of the podcast. I really do appreciate that. And thank you so much for the warm welcome as well. As you said in the intro, multifamily is my background. And when it comes to multifamily, I think the biggest key to success in the industry are basically relationships. And when it comes down to relationships, I joke all the time that the business cards change, but the people are all the same. So I think in order to really succeed in this industry, you've got to have some go-to friends in the industry that really have your back, that you're able to lean on in good times and bad. Because as you know, real estate is very cyclical. Unfortunately, we had a little bit of a blip this year in 2020. And we will get through it for sure. I'm very confident that we'll come out of this even stronger, especially on the multifamily space moving forward. So, I've had to sum it all up, but it's all about relationships.
Yep. And you know what? That's so true, Chad. And what's interesting is I was just having this conversation with my son about relationships, right? And I suggested that one of the best books I ever read about relationships is How to Win Friends and Influence Others, or Influence People, by Dale Carnegie, right?
Mm-hmm.
And trying to get him to engage in that a little bit and understand that, he thinks golf is going to help him with his business relationships, and it probably will, but so will that philosophy of how to build those relationships, right?
That's absolutely correct. Yeah,
So,
and I agree with him to some extent. Golf will
yeah,
definitely help. You'll see people at their best and their worst all in the span of 15 minutes.
yeah, right,
So
right, right.
it's a humbling game for sure.
Yeah, no doubt, no doubt. So, Chad, listen, tell the listeners, and what was the defining moment for you that made you go into the real estate business?
You know, I thought about this a lot, and because I don't come from a real estate family or background, this is something I chose to do. Um, while at Georgia, I bounced around majors just like everybody else, and finally ended up with marketing as a major, and it decided to take a real estate class as a business elective. I figured, hey, I may buy a house one day. I may, it may be something practical in class versus German polka history or underwater basket weaving, something like that. So took a real estate class at Georgia and fell in love with it. And the very first day, David Downs, who while I was at Georgia, he's now at VCU heading up their real estate department, but he drew a pie chart on the well, not the blackboard, whatever, the marker board that we had, and put 1/3 and then 2/3. And then he wrote real estate on the 2/3 side, and he wrote everything else on the 1/3 side. He turned around to the class and said, all real estate, 2/3 of the world's assets are tied up in real estate. 1/3 of everything else, chattel, whatever you want to call it, is on the other side.
Wow.
So that really left an impression, and felt like, well, if I want to play the odds, maybe I should be on the real estate side, on the 2/3 side, moving forward in a career. So I added real estate as a second major, and got a victory lap in, got an extra football season in at Georgia.
There you go.
And never looked back.
That's an interesting statistic, though, about 2/3 of the world's wealth like that. And
It is.
I knew that a lot of wealth had been created by some. When you look at the Rockefellers, or you look at Trump, right? There's just a ton of wealth that's been created through real estate by those people. But that's a big number.
It really is.
So, one of the things I always kid about is I say, we're never taught a lot of these principles in school, right? So growing up and going through high school or even undergrad, you're not taught a lot of these principles unless you specifically take a class and sign up for it. So, Chad, let me ask you this: with all your knowledge and your expertise, what is your real passion in real estate? What attracts you to the business the most?
Yeah, it's really what I'm working on now, which is what I call workforce housing. The best definition for workforce housing is apartment complexes that were built last century. So where I'm at in Atlanta, Atlanta grew up in the 70s, 80s, and the 90s, leading up to the Olympics in 1996. There was a big construction boom. So there's a lot of workforce housing throughout Metro Atlanta, suburban garden style workforce housing, 200 units and up, kind of the sweet spot. And that's kind of my passion. I believe that it feels really good to see investors buy older apartment complexes and kind of update them, bring them into the 21st century, make a nice community, for families to raise their children. So that feels good. I mean, it really does, to see something brought from a notch down to a notch up, and we're seeing that all throughout Metro Atlanta.
So let me ask you this. You and I know a couple of people that are so picky that they don't like that older stuff, right? So if it's not 1990 or newer, they're kind of shying away from it. Do you find a lot of people like that in the marketplace, or a lot of those, older deals still selling?
Yeah, it's kind of two different camps. You've got the institutional side that I joke, the real estate snobs. Everything has to be nice, new, and pretty. 9-foot ceilings, just these immaculate buildings. And those are the masters of the universe that really go after that kind of stuff. I mean,
Yeah.
they're the the Starwoods and the Blackstones and Carlisles and these really big shops out there. That's not what I do or who I work with. I work with individual owners, syndicators, people who pull their money together and take down a 1986 built 200 unit deal in the suburbs.
Right.
And there's certain cutoffs that the larger institutions, the really big players, they just don't go after that stuff unless they have a specific fund or whatever. But generally speaking, I deal with certified rich people who are basically going out to, to buy cash flowing positive cash flow property.
Yeah.
So
Interesting. I like that comment, certified rich people, right? So anyhow, what you're saying is really quite eye-opening for our listeners, because what that's telling them is that there's people in the marketplace, there's brokers in the marketplace that will work with them, that they don't have to be the upper institutional kind of money. I can remember being a kid driving down the road with my mom. I was young too, and I'll never forget this. I said, who owns that big building? And, out of nowhere, she said, an insurance company. And I don't even think she knew, right? But that's that institutional money, right?
it is.
So it's interesting. So what's the best way that your firm, particularly who you're working with today at Franklin Street, can help new and seasoned investors in the real estate business? And a lot of our listeners are newer investors, so even maybe just talk to them a little bit and talk about how you can work with them and help them.
Sure, absolutely. Yeah. This is, I guess, my commercial for Franklin Street.
Yeah, there you go.
We're here's my plug. We're a full service real estate firm. We handle investment sales not only for multifamily but for retail, office, industrial. We do debt and equity placement. We do landlord and tenant rep. We do property management. We do project management, which is an interesting line of business. If you do commercial build out or tenant improvements, we oversee that, manage the contractors, make sure it's on time and on budget. But the biggest piece of the Franklin Street pie happens to actually be insurance. So we insure about 28 billion in commercial real estate in America, about 15 million square foot of office and retail and industrial, and then about a little over 400,000 total units coast to coast. So insurance is a really big piece of the Franklin Street pie. So we could certainly help any of your listeners or podcast viewers out with any of those avenues. And I certainly encourage your listeners to certainly shop insurance as often as they can, because that winds up being loyalty does not really pay dividends, it seems like. Things change over time. So it always pays to shop insurance.
Yeah, not anymore, right? I remember when our dads were working, and it was they could work and know that for 40 years at 40 hours a week, they'd get a $40 watch at the end when they retired. And you don't even get that anymore today, right?
No.
So, hey, let me ask you though, you guys do insurance also. So do you broker insurance and sell real estate, or do you just do real estate?
I just do real estate. I'm strictly investment sales for multifamily, and specifically BC workforce housing throughout the state of Georgia and the surrounding states, Tennessee, Alabama, the Carolinas. We do have an office in Florida that handles all of Florida. So I'm just kind of the guy here, boots on the ground. I'm a team of we've got six other folks on our team. So team of 7. And this is all we really specialize in is older, BC workforce housing.
Interesting. So we all know what the environment is, the current environment right now, and we've got, we're somewhere hopefully in the middle or at the end of this, COVID-19 pandemic, right? What pitfalls should an investor look out for today, and what's going on? And I want you to kind of cover 2 points if you can. Like if you're somebody new coming in the business, or if you've been in for a while and you're trying to make a transition from smaller multifamily to larger multifamily, And then again, on the other side, the large syndicator, the people that we know, Chad, that are doing large 3, 4, 500 unit deals. What are the pitfalls out there today that everybody really needs to be watching for?
Yeah, I mean, there's a myriad of that, but from a general perspective, especially with people just starting out, I mean, I just want to stress that real estate's not a get rich quick business. It's kind of a get wealthy slow business. Um, I definitely think that you want to kind of there's an old saying, like if you're an actor, an actress, that nobody's an overnight success. Everybody's a 10-year overnight success. I certainly think that applies to real estate. If you've got the mentality to go out and kind of be like a bulldog on a meat truck and just kind of grind and grind and grind, real estate's you're going to do very, very well in real estate.
Yeah.
So once you get into the bigger players, I mean they're certainly they're well seasoned. It's all about reps. I think when you're just starting out, you want to see a lot of deals. You want to figure out what you like. What markets you're focused on. A lot of people in my space, they'll look, not only will they look in Atlanta, they'll look in Florida, they'll look in Texas, they'll kind of bounce all over the map regarding this particular housing class. So for your people just starting out that are listening to this, I think it's just kind of focus on an area that you feel like you understand and that you can grow in. And I think, over time, certainly, if you stick to it long enough, good things will come your way.
Yeah. Interesting. Good for you. You said an interesting word, and you said grind. And, I think I've talked to a couple of people recently who are new in the business and coming in the business. And I said, you just have to stay consistent. You have to walk through it. And you probably can appreciate this, but I remember when I first got in the real estate business, I joined the business. I was a sales agent as selling residential real estate. And my first 8 months in the business, I grounded out calling for sale by owners every day and sold 78 single family houses my first year. And I'm sure you'll appreciate that because you know what kind of work that takes and especially using the word grind, right?
Mm-hmm.
So is it the same type of, when you're searching for, so say that you're looking for a buyer, you have a new investor that you're working with or a seasoned investor that you're working with, and you're trying to find a specific deal for them. Are you going to sellers, looking for sellers to sell, or go ahead?
Yeah, it's kind of the opposite. We generally, we're listing brokers, so we generally represent the sellers. So we've got relationships that go back, years and years and years, and deals that we've done in the past. So, activity certainly breeds activity, and what activity of the past, you're planting those seeds for a tree to grow, into the future. And so that's kind of the concept. Buyers typically call us about, we'll blast out a listing and say, hey, we've got, a 200 unit deal for sale in Cobb County, and we'll field all the phone calls and then tour the real estate with those who want to tour, and then have a call for offers, get the offers in, probably take the top 3 or 4 groups for a best and final, and make sure they've got their equity together, their debt together, they've got a track record, they know what they're doing, the decision makers have seen the real estate. We try to just eliminate risk from our clients, eliminate as much risk from our client in transacting as possible. And, that's kind of the value that we bring to the table is generally, if you're in the business for a long time, you tend to know a lot of the players. Not to say that we know everybody, we certainly don't, but we know a fair number of people and know that the groups who transact and who do what they say and say what they do over time. And that really rings true whenever you're calling for offers and can get a deal done that way.
So you're in Atlanta. Atlanta is one of the hottest multifamily markets right now. I've heard it said that that's where all the smart money's buying right now. And so are you finding, are the offers that people are putting in, are you seeing them be accelerated over list price, or are the offers coming in, are they all blind price offers? How's that whole process work these days?
Yeah, right. Leading, before March, before COVID kind of came in, it was not uncommon to see hard earnest money day one, subject to survey, title, environmental. Most everybody was using agency financing or a bridge product to take a deal down. So it's usually, hard earnest money. Pricing was pretty close to our guidance. We would we would typically have guidance that was right in line with where most things would trade. I mean, within 1% or 2. Then COVID hit, and post COVID, we've probably had 3 transactions post COVID, and usually it's about, we were averaging maybe 5 to 6% of a discount in pricing right now when it comes post COVID. So it's not anything that we saw certainly in 2008. That was just a real estate led recession. I mean, it was really, you look back on it, you had, gosh, how many presidents were pushing home ownership, leading up to the real estate crash. Certainly Bill Clinton did, George Bush did, the crash occurred. So, two-term presidents that did nothing but push home ownership that kind of led us over the edge. And the no job, no income, no problem loans and all that kind of stuff. That really made for a messy real estate market in 2008, 9, 10. I think we had REO all the way up until probably 15, if not 16.
Right.
This pullback, I don't think we'll see quite that much, Mike. I think it'll be, people can mess up an apartment complex a bunch of different ways, but I don't think you'll see nearly the amount of REO product that we had way back when. So, I think you'll see a slight dip, and then I do think you'll probably have more renters in the renter pool coming out of this than ever. So I think there'll be the demand will just be so strong for multifamily housing, specifically and particularly in the suburbs throughout the major metros, that I think we're in a pretty good spot coming out of this. There'll probably be a little bit of an operational pullback. You'll have to manage some bad debt. You'll have to manage some situations with, unfortunately, people losing their jobs and having to work with people. But once we kind of get firm footing again, hopefully in the early part of 2021, I think multifamily is a really good spot to be in.
Yeah. Well, one of the things historically, year after year, I think multifamily has been, is good, right? And what's interesting to me is most people that I'm talking to right now, they're still saying that their rent collections are strong in the midst of all this. And I just find that to be interesting. You got people that were out of work for 90 days. And I wonder if the single family residential stuff might get, hit a little bit because of all the forbearances and things like that went on. But, we'll have to see what happens as people continue to go back to work. And, I know one of the interesting statistics in the city of Chicago was that 4,400 businesses closed down in March.
Oh, wow.
And only 2,100 of them have reopened or plan to reopen. So, and that's, you're talking about, the little flower shops, the nail salons, the bars, the restaurants, all of those types of businesses. And I found that to be interesting statistics, and here's what I know about America and us as a country and real estate. 2001, we recovered. 2008, we recovered. We'll recover from this also. So I don't think that anybody should pull back or be afraid, because we'll see this continue to explode, right? And people will be successful as a result of it. So
I couldn't agree more, Mike. We've it's crazy to think about this, the start of this century. We've had 3 major 100-year events, if you would, between 9/11. I mean, the worst attack on American soil since December 7th, 1941, Pearl Harbor. Then you have the Great Recession in 2008, the worst since the Depression, the worst economic event in America since the Great Depression. And now we've got a global pandemic, the worst since 1918. So there will be more recessions moving forward. I just don't want these 100-year events or these
Right.
historic events to come back. I just want just a regular, hey, we got a little overheated, we'll pull back for 2 quarters and then move forward type recession. So maybe bad things come in 3. We got all 3 of the bad things out of the way early in the century and can really
Well,
forward.
you kind of talked about 3 bad presidents there.
Yeah, but like you said, always bet on America because we rebound.
Absolutely.
I mean, it's it really makes you feel proud to be an American that we go through such catastrophic events and come out the other side.
And I didn't mean to say 3 bad presidents. What I meant to say was that I think that there were 3 presidents in a row that pushed that home ownership issue.
Oh, yes.
And there's a balance in the economy. If you talk to any economist, they tell you that the economy's balanced at, I think, 67 or 66 to 67% home ownership.
Yeah.
And as soon as these guys started to stress it at 71, 72%, the world went nuts.
It upset the apple cart. It sure did. So, and rental housing, whether it be multifamily or single family rental, is vital for a large segment of our society. And having clean, decent, warm, safe housing is a must.
Yeah. My dad told me when I was a kid, he said, hey, if you're ever going to go into business for yourself, go into food, shelter, and clothing. And I've been in shelter for 30 years and I've never been unhappy. Right?
That's great advice.
Yeah.
I couldn't agree more.
So, hey, if you were going to design a plan today for yourself as a new multifamily investor coming into the marketplace, what would that look like?
Gosh, if I was brand new into multifamily, just coming out, I tell you what, a bad strategy wouldn't be maybe you buy a duplex or a quad or an eightplex and you live in one unit. And now, if you're single, that's totally easy to do. If you're married, you got to have an understanding spouse for sure. So, but I've heard of people doing that, starting out their multifamily career, just actually living at where they buy, and really, your housing is basically taken care of. You're able to reinvest that capital that you would be paying for housing into the real estate there. You nurse it back to health, you fill it up, and you cash out refi, 18, 24 months down the road, and wash, rinse, and repeat. I think that's a fantastic strategy for someone young starting out in the industry to really build up a nice cash flow business that they could to be proud of and scale up from.
And that's interesting. You said that. I actually didn't expect you to say that, but one of the strategies I teach new investors is, hey, if you can create wealth with 2 to 4 unit properties, and buy that first one, buy a duplex, buy a 2-flat or a 4-flat, and you could do FHA financing. You live in one of the units, you get your feet wet, you've got economies of scale, you got ease of entry, and you learn the management stuff along the way. And now it makes the next one so much easier, right?
That's right. And it's all about getting on base and building up a track record. So the first deal you do is always the hardest. I mean, that's no matter what. The first deal is always the hardest. You build upon that, and you slowly step up over time. And the time frame will compress in between deals. I mean, maybe the first deal you buy and you got to wait 2 or 3 years before the next, and then time frame compresses between the second and third, and even more between the third and the fourth. But I think it's an excellent way to go about it. You kind of, in our industry, about 100 units is kind of the major tipping point to where you can actually have like an on-site manager and an on-site maintenance guy. The old adage is for every 100 units, you can have one in the office and one on the grounds. So 100 units is kind of the tipping point where you get into more seasoned, bigger, more established players, because they started from the ground up and built themselves up from quads and eightplexes and 16 this and 36 that, and that's kind of what you will ultimately want to do, and have the management, on site to take care of the residents.
Yeah, yeah, interesting. One of the things I talk about this a lot with my coaching clients is there's one of the large world REITs right now. And for those listeners that don't know, a REIT is a real estate investment trust, similar to a mutual fund, right? They started out as a multifamily syndicator, and the first deal that they bought was a frame 4-unit building in Chicago. And today, these 4 gentlemen that started this company are just the hugest REIT in the world right now, and in every asset class. So, everybody has to start somewhere, right?
That's right. Yeah, and like I said, getting on base is, I don't care if you're hit by a pitch, if you're walked, single, just get on base.
Oh, a baseball fan. Look at that. Have you watched baseball at all this year?
Yeah, and being from Atlanta, of course, the Braves are a big deal. So yeah, we're thrilled to have baseball back, and actually the Braves are playing pretty good baseball. So of course, this will be the year we win the World Series. Just we can have an asterisk by only however many 65 games or however many they're playing. So but that'll be our luck. But I guess you can take what you can get.
And nobody there watching. I think the spookiest thing
Yeah.
is when I turn the White Sox on and, there's nobody in the stands.
Yeah, just cardboard cutout.
I can't even watch this.
Yeah.
So, Chad, do you have any secrets that you would share with our listeners?
I don't know if this is much of a secret. It's kind of common sense once you hear it. But in multifamily, job creation is just the single most important driver to apartment demand. So I think for your individuals listening right now, I would focus in markets that are creating jobs and gaining population. It's that simple of a metric, really. So where I'm at in Atlanta, as you mentioned, it's picking up a lot of population, picking up a lot of jobs. The state of Georgia right now is 10.6 million people. So we're the 8th most populous state in the union. 6 million of the 10.6 are in Metro Atlanta. So 60% of the entire state's population is Metro Atlanta. And kind of a few fun facts is over the next 10 years, the state of Georgia is expected to grow 17.7% population. And then over the next 30 years, I found this fascinating, the city of Atlanta is going to pick up an additional 2.6 million people off of the 6 million base they've got now. So we're basically going to add the equivalent of the Denver population to Atlanta between now and 2050.
Wow.
So there's going to be a big demand for housing.
Yeah. Those are interesting statistics. So, I know every year and sometimes in the middle of the year it gets revised, but there's a top 10 market list that'll be published, and that'll come out by the big brokers in the country, and it'll by the analytical companies. So where does Atlanta place on that top 10 list right now?
Oh, I'm not sure where, as far as the growth pattern goes. I mean, we've usually been, right up there with Dallas. Phoenix has entertained a lot of growth, but I haven't seen the latest report yet to say where we slot. But we're usually, pretty high up there. I mean, we've been 1 several times, and we've been, 10 several times, but rarely are we out of the top 10.
And what's interesting is those rankings are always based on everything you talked about, right? So growth, job support, rental pushes, all those things that will help a multifamily operator do well. And so what I always tell people is everything you just talked about, and if you're somebody listening to this podcast, go back and listen to that again and look at those numbers that Chad talked about, because in your marketplace, or if you're buying multifamily outside of your own marketplace, see what's going on. Are you in an emerging market? Are you in a market that's going to support any rent growth? Don't fall into the traps of not having the great opportunities that you could have in a market like Atlanta.
That's right. No, we appreciate that. And you know, in Atlanta, kind of jumping ahead a little bit, kind of a few little more fun facts about Atlanta is we've got a real diverse economic background. So you can't really say that Atlanta does any one thing. You know, it's not a oil town. It's not like Detroit. You know, you think of the automotive industry. You know, I mean, we've got 16 Fortune 500 companies based in Atlanta. So that's number 4 in the country. We've got 30 Fortune 1000 companies based in Atlanta. We're just a big magnet for college graduates in Atlanta. You know, I'm kind of the perfect case study when it comes to that. I'm from a small town in Northwest Georgia called Dalton, Georgia, and our claim to fame is we're the carpet capital of the world. So they've got 3 major carpet manufacturing facilities or companies in Dalton. And the only thing I desire to do with carpets, walk on it. You know, when I graduated from Georgia, I was not going to move back to Dalton. You know, I had no real desire to do that. So moved to Atlanta. You know, you get the same thing with kids that may be graduating from Auburn or Alabama or Tennessee or Clemson, Florida. Atlanta's the big city in the Southeast, so it has a natural kind of gravity, you know, for college educated folks. And a couple other fun facts about Atlanta is we've really kicked it into high gear regarding high tech jobs in Atlanta. We've gained about 32,000 technology jobs over the past 5 years. We're now one of the top 10 high tech cities in North America, ranking in at number 9. Which, I mean, you usually think of San Francisco and Seattle and Austin, Texas, Raleigh. You know, Toronto is another big high tech city. Atlanta's number 9. So we've got about close to 150,000 high tech jobs in Atlanta. So we have that kind of on the higher end of the scale. But on the more of the, you know, in my world, the workforce housing world, we've also become just a national super hub for shipping, transportation, distribution, warehouse. So the south side of town, predominantly around the airport, around Hartsville Jackson, the world's busiest airport, or at least it was pre-COVID. We've got all these major Fortune 500 companies placing these 1,000,000 square foot industrial beds all throughout the south side of town. So, you know, Procter & Gamble, Walmart, Amazon, Kroger, you've got just these major companies placing these huge bets throughout the south side. And those are all great jobs, hourly wage, you know, $15 to $20 an hour jobs. And that's kind of our renter base. And then you tie that into the reason why, you know, people ask why Atlanta, why is it such a logistical hub, is really it's kind of at the southern range of the Appalachian Mountains. So the Appalachian Mountains start about 70 miles north of Atlanta. And they've always been a natural barrier for growth throughout America, throughout our history. You know, we kind of, that was just kind of where the 13 colonies originally stopped, were the Appalachian Mountains. So we eventually got over the mountains and grew west. But from Atlanta, we're kind of the first flat spot you come to. You could ship northeast, I-85, and it ultimately ties into I-95 in Virginia. You can ship to the Midwest really easy, up I-75 that goes all the way to Detroit and you know, through a lot of towns in between. Or you can ship east-west really easy because we're the first flat spot you come to. I-20 goes all the way out to Dallas. So we're just kind of, you go through the Sun Belt, you go to the Midwest, you go to the Northeast, and that's truck traffic. That doesn't, we're basically the stat for Atlanta when it comes to truck traffic is we're basically 2 days away from 80% of the U.S. population. On the air side, we're 2 hours away from 80% of the U.S. population coming out of Atlanta.
Wow,
interesting. Fortune 500 companies. One of the big guys here happens to be UPS.
Sure.
They're pretty good at logistics. They picked Atlanta probably for a reason. They actually just built a massive facility in Atlanta. It's the second largest UPS facility in at least the United States, if not the entire world. The first one is in Louisville, Kentucky. But they just finished construction just west of right basically where I-20 and 285 come together on the west side of town. So that was a big deal. So
Wow, that's a lot. That's a lot to think about, especially if you're looking for a market to go to. Whether, and I'm sure, Chad, that there are small multifamily as there is large multifamily there. So if
That's
a
correct.
new investor was looking to even get their feet wet, that they could find that product there as well. So that's awesome to know. So one last question I have for you is, what advice would you give a brand new investor today?
You know, I guess it kind of comes back to relationships. You want to ultimately, no matter the product type you're in, or the market you're in, you get to know the players in that particular market. And if you live somewhere else and you're investing in, say, Atlanta or Dallas or Phoenix or Salt Lake City, wherever, get to know the players in that market, because it ultimately comes back down to relationships and figuring out what you like in those particular markets by just talking with people, learn from their experience. Usually real estate people are pretty level-headed and open individuals, approachable individuals for the most part. I mean, there's always exceptions to the rule, but in my experience, they're usually good-hearted people. And if you approach somebody and want to learn, they'll share with you, maybe not the total secret sauce, but at least give you enough guidance as to, hey, this is a good market. Oh, I invested there, I'll never invest there again. Sometimes the good advice is maybe knowing where not to go
Yeah.
versus where to go. That
Well,
helps.
and it's kind of interesting. You kind of alluded to the fact that, building those relationships, even with your peers, right? The people
Hmm.
that are in the same space you're in, and I had somebody say one time, well, that's an awful lot of competition in there. And I thought, look how many McDonald's or Starbucks are built on different corners.
Hmm.
I don't buy into competition. I think we're all in this together. We might as well all learn from each other. We might as well all grow together. And, it just, the only competition I see is yourself. Right. So,
That's right.
but Chad, I want to thank you for today. This has been very enlightening, both about Franklin Street and Atlanta and yourself and your strategies in that. You learned a lot. I know that my listeners have learned a lot here today. I look forward to your participation at our global summit on the panel, and really thanks again for your time today. And everybody who's listening, I just want you to remember about our Saturday morning Multifamily Unplugged show. That's at 10 o'clock on Saturday mornings. And, Chad, if you would say goodbye to everybody and go ahead.
Oh, absolutely. Thank you so much, Mike, for having me. And another shameless plug, if there's anybody out there who wants to learn more about Atlanta, if they want to reach out to me directly, feel free.
Yeah, how
Direct
do they
dial.
do that, Chad? How do they get a hold of you?
Yeah, my direct dial is 404-649-6279, or they can email me, Chad, CHAD, Defoor, DEFOOR, at franklinst.com. They can also check out our website, franklinst.com, www.franklinst.com. There we've got listings. Tells a little bit more about the company and our background and how we can help your listeners out for the real estate needs.
Great. Well, thanks for that. And we'll have Chad's information on our website. And everybody have a great day. And we'll look forward to talking to you and seeing you again on next Tuesday.